Hello everyone, I'm CA Neeraj B. Welcome back to my YouTube channel @Accounting Buddy NB. In today's video, we will walk you through all the essentials from preparing a double column cash book with overdrafts to understanding and recording entries in petty cash book. We will explore the key features, importance and difference between the petty cash book including the simple and the analytical petty cash book formats. We will also cover the Imprest system followed by practical illustrations, balancing techniques and how to post transactions step by step. Whether you are a beginner or brushing up your basics, this video breaks it down in the most practical and easy to understand way. Let's get started. Let us prepare two-column cash book from the following transactions for the training business of Mr. Kohli. The format of the double column cash book is displayed on your screen. Transaction T1 is as on 1st February 25, business is having a cash in hand balance of $80,000. Cash in hand balance is always a debit balance. Therefore, the opening balance of cash in hand of $80,000 will appear in the cash column on the left hand debit side of the cash book on 1st of February 25 by writing the words to balance brought down. Transaction T2 is as on 1st January 25, business is having an overdraft balance of $100,000. Bank overdraft is a liability of a business. Therefore, it will be shown in the bank column on the right hand credit side of the cash book for $100,000 on 1st of February 25 by writing the words by balance brought down. Transaction T3 is on 5th of February 25, business deposited $50,000 cash in bank. This transaction will affect both sides of the cash book. Since there is an increase in the bank balance, an amount of $50,000 will be recorded on the left hand debit side of the cash book on 5th February 25 by writing the words to cash account. Similarly, since there is an outflow of cash, $50,000 will be recorded in the cash column on the right hand credit side of the cash book on 5th of February 25 by writing the words by bank account. As this is a contra entry, it will be represented by writing the letter C in the journal folio column on both the sides of the cash book. Transaction T4 is on 7th February 25, business purchased goods worth $25,000 and settled the transaction by check. Since this is a payment transaction, it will be recorded in the bank column on the right hand credit side of the cash book for $25,000 on 7th of February 25 by writing the words by purchases account. Transaction T5 is on 9th February 25, business paid $2,000 freight by check. Since it is a payment transaction, it will be recorded in the bank column on the right hand credit side of the cash book for $2,000 on 9th of February 25 by writing the words by freight account. Transaction T6 is on 12th February 25, business purchased goods for $10,000 and paid cash. Since it is a payment transaction, it will be recorded in the cash column on the right hand credit side of the cash book for $10,000 on 12th of February 25 by writing the word by purchases account. Transaction T7 is on 15th February 25, business did a cash sales of $50,000. Since it is a receipt transaction, it will be recorded in the cash column on the left hand debit side of the cash book for $50,000 on 15th February 25 by writing the words to sales account. Transaction T8 is on 20th February 25, business sold $80,000 value of goods to Ramo LLC. Since the goods are sold to Ramo LLC on credit, this transaction will not be recorded in the cash book. Transaction T9 is on 25th February 25, business received a check of $60,000 from Ramo LLC. Since it is a receipt transaction, it will be recorded in the bank column on the left hand debit side of the cash book for $60,000 on 25th February 25 by writing the words to Ramo LLC account. Transaction T10 is on 28th February 25, business paid salary for $25,000 through bank. Since it is a payment transaction, it will be recorded in the bank column on the right hand credit side of the cash book for $25,000 on 28th February 25 by writing the words "buy salary account." Let us now do the balancing of the cash book. First, we will do the totaling of the cash column on the left hand debit side, and it comes to $130,000. Now, if we deduct all the cash column transactions on the right hand credit side of the cash book from the total of the cash column on the left hand debit side, we are left with a balance of $70,000, which will be the closing cash in hand balance as on the last day of February 25, that is 28th February 25, and will be written as "buy balance carried down." Thus makes the total of cash column on the right hand credit side also equal to $130,000. Now let us do the total of the bank column on the right hand credit side of the cash book, which in our illustration comes to $152,000. Now if we deduct all the bank column transactions on the left hand debit side from the total of the bank column on the right hand credit side, we are left with a balance of $42,000, which will be the closing balance of the bank overdraft as on the last day of February, that is 28th February 25, and will be written as "to balance carried down" on the left hand debit side of the cash book. Therefore, the total of the bank column on the left hand debit side will also become $152,000. Thus, the cash book is said to be balanced. The closing cash in hand balance of $70,000 as on the last day of February 25, that is 28th February 25, will become the opening balance of $70,000 as on 1st of March 25 by writing the words "to balance brought down" on the left hand debit side of the cash book. Similarly, the closing overdraft bank balance of $42,000 as on last day of February 25, that is on 20th February 25, will become the opening balance of $42,000 as on 1st of March 25 by writing the words "buy balance brought down" on the right hand credit side of the cash book. Let us learn all about petty cash book. A petty cash book is a specialized accounting ledger used to record small everyday business expenses that are too minor to be processed through the main cash book or the bank book. These expenses typically include office supplies, postage, travel, and minor repairs. The petty cash book helps businesses efficiently manage small transactions without burdening the primary accounting system. Apart from recording petty cash expenses, receipts from the cashier are also recorded. Petty cash book is like a petty cash account and is managed by the petty cashier. Petty cash is given to the petty cashier for small payments recorded on the credit side of the petty cash book as by the name of the expense account, and the same is posted to the debit side of the respective expense accounts in the ledger. Let us learn key features of petty cash book. First is it records small payments. It tracks minor expenses such as stationery, postage, tea, coffee expenses, and travel costs. Second important feature is it uses an Imprest system in most of the cases. Under this system, a fixed amount is allocated for petty cash expenses, and after usage, the amount is reimbursed to maintain a constant balance. Petty cash is maintained by a petty cashier. A designated person called petty cashier is responsible for managing and recording all the petty cash transactions. Under petty cash system, expense transactions are recorded in a chronological order. Expenses are recorded in the order they occur, ensuring accurate tracking and control. Petty cash book categorizes expenses under different heads such as transport, stationery, postage for easy analysis. For recording petty cash transactions, vouchers or the receipts are used as supporting documents. No petty cash transaction is recorded without a supporting document. Every transaction should be backed up by a voucher or a receipt as a proof of payment. Petty cash book reduces the burden on the main cash book. It helps keep minor expenses separate so that primary cash book is more focused on the major transactions. Petty cash book is an important record for any business. Petty cash book ensures efficient cash management. It helps businesses to handle small expenses systematically, preventing cash leakages and unauthorized spendings. Petty cash book also ensures better control over expenses. By monitoring small expenses, business can identify high costs and implement cost cutting measures. In case a petty cash book is maintained by a business, it also reduces the workload on the main cashier. By handling minor transaction, it allows the main cashier to focus on the significant financial matters. Petty cash also improves accuracy in financial reporting. It ensures proper recording of small expenses and thus reduces errors and discrepancies in the financial statements. By maintaining petty cash book, business can prevent frauds and misuse of cash. Since expenses are documented with vouchers and viewed periodically, it minimizes the risk of fraud or mismanagement. Petty cash also aids in budgeting of business expenses and various cost analysis. Businesses can analyze petty cash expenses to plan budgets more efficiently and optimize cost efficiencies. Petty cash book also ensures business continuity. Having a readily available petty cash fund ensures that the essential small business expenses are paid without any delay. There are two systems of petty cash management. First is simple system of petty cash and the second is Imprest system of petty cash. In simple system of petty cashier is given an appropriate amount of cash and after spending the amount, he submits the petty cash amount to the head cashier. Under Imprest system of petty cash, an estimate is made of the amount required for petty expenses over a period of time, say a week or a month. Accordingly, the amount so estimated is given to the petty cashier in the beginning of a period. Petty cashier will keep on paying for the petty expenses out of the amount paid to him in the beginning of the period and will get a reimbursement periodically. The amount so paid to petty cashier is called the impressed money. This system of paying in advance in the beginning and reimbursement of the amount spent from time to time is called the impressed system. There are two types of petty cash books. First is simple petty cash book and the second is analytical petty cash book. Let us first learn more about simple petty cash book. A simple petty cash book is identical to a cash book. The amount of cash which the petty cashier receives is recorded on the left hand debit side cash column or the receipt column, and the cash which is paid is recorded on the right hand credit side cash column or the payment column. Simple petty cash book has one column for receipts and one column for payments. The date and the particulars of every transaction, whether receipt or payment, is written in the same date and particulars column. Let us learn the format of a simple petty cash book. There are 7 columns in a petty cash book as displayed on your screens. Column number 1 is to record the amount of cash received from the main or the chief cashier. Column number 2 is for cash book folio. It is the page of the main cash book where the amount paid to the petty cashier is recorded. Column number 3 is to record the date of payment or the receipt of cash. Column number 4 is to record particulars of the transaction, which generally is the name of the expense head for which the cash is paid. Column number 5 is for ledger folio page, that is the page number of the ledger expense account on which the expense entry is posted. Column number 6 is for voucher number basis which the expense is paid and recorded in the petty cash book. Column number 7 is to record the amount of cash paid. Let us understand in detail how the transactions are recorded in a petty cash book. Petty cash book for the month of, say, February 25 of a business is displayed on your screen. On 1st of February 25, business withdrew an amount of $4,000 for petty cash. This transaction of $4,000 will be recorded in the amount received column on 1st of February 25 by writing the words to bank account in the particulars column. On 3rd of February 25, business paid $200 for stationery. This transaction will be recorded on 3rd of February 25 by writing the words buy stationery account in the particulars column for $200. On 7th February 25, petty cashier paid $100 as conveyance to one of the staff. This transaction will be recorded on 7th of February 25 by writing the words buy conveyance account in the particulars column for $100. On 10th of February 25, petty cashier paid $500 to replace two electrical bulbs. This transaction will be recorded on 10th of February 25 by writing the words buy office repairs account for $50. On 14th February 25, petty cashier paid $150 as cartage. This transaction will be recorded on 14th February 25 by writing the words buy cartage account in the particulars column for $150. On 20th February 25, petty cashier paid a bill of $100 for telephone expenses. This transaction will be recorded on 20th of February 25 by writing the words buy telephone account in the particulars column for $100. On 25th February 25, petty cashier paid $200 to buy staff pantry items. This transaction will be recorded on 25th of February 25 by writing the words buy pantry expense accounts in the particulars column for $200. On 28th February 25, petty cashier paid $75 as taxi charges for one of the staffs. This transaction will be recorded on 28th of February 25 by writing the words buy conveyance account under the particulars column for $75. Now when from the total amount received column of $4,000 we deduct the sum of all the petty cash payments, petty cashier is left with a petty cash in hand balance of $3,125, which will be recorded on the last day of February 25, that is 28th of February, by writing the words buy balance carried down. By doing this process, the petty cash book is balanced. Now the closing petty cash in hand balance of $3,125 as on 20th February 25 will become the opening petty cash in hand and will be shown in the amount received column on 1st of March 25 by writing the words to balance brought down. Now $875 will be withdrawn from the bank on 1st of March 25 to again make the petty cash balance available with the petty cashier to $4,000 by writing the words to bank account. Let us learn about analytical petty cash book. An analytical petty cash book has two sides. Left hand side is used for recording receipts of cash and right hand side has multiple columns for recording a particular type of business expenditure. For example, there can be separate columns for conveyance, postage, telephone expenses, staff pantry expenses, etc. These columns are created basis frequently incurred business expenditures. A column is usually provided for sundries to record payments which are not frequently made. When petty cash expense is recorded on the right side total payment column, same amount is also recorded in the appropriate expense column. At the end of each period, expense column is totaled and is posted to the debit side of the respective accounts. The specimen of an analytical cash book is displayed on your screen. In the receipt column, the amount of cash received to meet the petty cash expenses is recorded. Next three columns Date, voucher number and particulars are common for the receipt and the petty cash expense payments. The amount of petty cash actually paid for each expense transaction is recorded under the amount column. Then we have expense head column for all the frequently incurred business expenses such as conveyance, pantry expenses, telephone expenses, postage expenses, and one column for sundry expenses. These expense columns varies from business to business. Let us understand the difference between the simple and the analytical petty cash book. In simple petty cash book, separate record of each kind of petty expenses is not maintained. Under analytical petty cash book, for commonly occurring expenses, a separate column is created to record repetitive expenses. Simple petty cash book is maintained in the same manner as the cash book is written. The pages are divided down the center. Whereas in analytical petty cash book, the pages are not divided down the center. Major space is provided for the expense side, having separate columns for expenses incurred regularly. In case of simple petty cash book, at the end of the period, total expenses under different heads cannot be determined easily. While in case of analytical petty cash book, at the end of the period, expenses under different heads can be determined easily. Let us prepare an analytical petty cash book on the basis of Imprest system. All the petty cash expense transactions of a business, say for the month of March 25, are displayed on your screen. On 1st March 25, petty cashier received $2,000 to meet the petty cash expenses of the business. First of all, for every petty cash paid, we should identify the appropriate account head. In our example, petty cashier paid conveyance expense to the business staff 5 times in March 25. Please note that taxi fare, metro fare, bus fare all are of the nature of conveyance. Therefore, all these expenses will be accounted under the expense head of conveyance account. Similarly, petty cashier has paid pantry expenses, telephone expenses and postage expenses 2 times in the month of March 25. And an expense of unloading charges which is not a recurring in nature is classified as sundry expenses. Let us see how these petty cash expenses will be recorded in the analytical cash book in the next slide. When all petty cash expense payments as per previous slide are recorded in an analytical petty cash book, it will look like as appearing on your screens. An amount of $2,000 taken for petty cash expenses will be recorded in the receipt column by writing the words to cash account on 1st of March 25. The two columns of voucher number and particulars are common for both receipt and payment transactions. So the petty cash amount paid as conveyance on various dates will be recorded by writing the word to conveyance account in the particulars column. The amount of conveyance paid will be recorded first in the amount column and again under the column created for conveyance expenses. Every conveyance transaction will be recorded on the date in which the cash is actually paid. Similarly, pantry expenses paid out of petty cash will first be recorded in the amount column and again under the column created for pantry expenses. Telephone expenses paid out of petty cash will first be recorded in the amount column and then again under the column created for telephone expenses. Similarly, postage paid out of petty cash will first be recorded in the amount column and then again under the column created for postage expenses. Now, petty cash expenses like casual labor not paid frequently will first be recorded in the amount column and then again under sundries column. Now, if we deduct from the total receipts of $2,000 all the petty cash payments of $725, we are left with a petty cash balance of $1,275, which will be written under the amount column by writing the words by balance carried down on 31st March 25. Please note that the total payments under each expense head will be equal to the total of all the payments recorded under the amount column. By following this process, the total of the receipt column and the total of the payment column will be equal and petty cash book is said to be balanced. The closing petty cash in hand of $1,275 on 31st March 25 will become the opening balance and will appear in the receipt column by writing the words "to balance brought down." The petty cash will be reimbursed with $725 by writing the words "to cash account" to make the impressed balance again to $2,000. Let us now learn the process of posting petty cash book transactions. Entries in the petty cash book are posted in the ledger accounts at the end of specific period. Petty cash book is considered as a memorandum book. A petty cash book is created in the ledger when the petty cash is given to the petty cashier. It is recorded in the right hand credit side of the cash book by writing the words "by petty cash account." At the end of specific period, say a week or a month, a journal entry for all the expenses paid out of petty cash is passed by debiting the respective expense accounts and crediting the petty cash account. When cash amount is advanced to the petty cashier, below entry is passed in the cash column of the cash book. Debit petty cash account and credit cash account. And when the petty cash expense account is submitted, below entry is passed. Debit expenses account and credit petty cash account. In ledger, there is a petty cash account and a separate ledger account for each expense head. When $2,000 is given to petty cashier, it will appear in the petty cash book under the receipt column with the date on which it is received and by writing the words "to cash account" in the particulars column. Now the entry for $2,000 given to petty cashier will be passed as appearing on your screens. The two accounts affected by this transaction are petty cash account and cash account. Petty cash account will be debited and the cash account will be credited. Now when the petty cash account is submitted, the summary total of each expense head will be considered for passing the entry. The entry will be passed as appearing on your screen. All the expense heads will be debited with the total amounts paid under each head during the specific period, and the petty cash account will be credited with the sum total of petty cash expenses paid under all the expense heads. And when the petty cash is reimbursed, below entry is passed: debit petty cash account and credit cash account. In my upcoming video on 21st June 25 of part 5 in the series of the topic cash book, we will be discussing 100 plus questions and answers under 6 sections as displayed on your screen. If you enjoy the content of my video and appreciate my teaching style, please subscribe, share and like my YouTube channel @Accounting Buddy NB. Thank you and goodbye for now.